Hello and welcome everyone to one another video where today we are going to discuss about bookkeeping, how it lays foundation to your year-end accounts and taxation, the fancy things that you have heard and you think of bookkeeping as just a data entry and low value task, but it isn't. And I will show you the importance of it today. And also we are going to look at some of the common errors that bookkeepers make and how could you avoid these mistakes so that your books are clearer, and if they are accurate we can have your accurate year-end accounts and session is filed correctly. Okay, so what I've seen is that most of the business owners think that bookkeeping is just a data entry. Even many accountants see it as a low value task compared to your year-end accounts and taxation, but in reality bookkeeping sets the foundation. I've seen profitable business struggle not because of sales, they are doing good sales, but because of small bookkeeping mistakes, right? They struggle. Let's talk about the common ones and how to avoid them. Okay, so let me share my screen and start today's video. Okay, okay. So it is the foundation of financial success. Your financial success is uh, one of the key motto that you are doing the business, right? And to attain that financial success, you have to have a proper, neat, and clean bookkeeping. Okay, accurate bookkeeping forms the cornerstone of successful businesses, serving as the critical foundation for year-end reporting and taxation compliance. So, if your bookkeeping is error prone, you can't file your year-end and taxation accurately. So, if you have executed your bookkeeping process properly, you have proper records systematically and regularly reviews on it, you can provide clarity to the business and you can ensure regulatory adherence, and it empowers you to take informed business decision throughout the financial year. Okay, so this is just an intro that we recently saw. Okay, uh, whilst meeting regulatory requirements remains essential, exceptional. So regulatory requirements are your year-end accounts, statutory accounts that you file to HMRC, to companies house beta. Okay, and this taxation also you file, right? You calculate the tax liability and file to your authority. Okay, so although they are essential, but again, if you are ignoring your bookkeeping part, I think this is the biggest mistake you are doing as a business. You need to review your bookkeeping process. So, bookkeeping is something that transfers raw data into actionable intelligence. It reveals trends and opportunities that drive business growth. So, clean books enable confident decision making, facilitate smooth audits, and position businesses for success when seeking financial or planning expansion. Okay, so this expansion or financing thing is done on real time basis, not just you will wait for your accounts to be compiled at the year end and then you get the insight whether to have this financing decision or whether to expand my entity. Do I have enough cash flow with me? So this all the things, if your bookkeeping is proper, it is regulated correctly, it is being reviewed regularly, you can take confident business decisions. So let's see uh, some of the errors that can undermine your business. So even experienced business owners fall prey to common bookkeeping mistakes that compromise financial accuracy. So this creates error. And if there is one error and multiple errors go and run out here, and it at the end sets up incorrect reporting. So if the bookkeeper provides incorrect data, the statutory accountant could not do anything because he isn't working with the business owner on day-to-day basis. He do not know how are the things working in the business. So someone who can provide insight to the business owner in real sight is the bookkeeper, right? Okay, you can miss out the regular tax liabilities, right? The VAT liabilities if you not follow the VAT reporting, or if we talk about any other jurisdiction, you have multiple deadlines that you need to uh, like you have to fall into that multiple deadlines. You have to remember that and file those things regularly. So if you aren't up to date to it, you might get penalties and interest. We would discuss about it in the next few slides, where we have separate thing for deadlines as well. So understanding what would be my benefit if I understand this mistake. So if you understand this mistake, these are the mistake that someone else has did, right? If you understand these mistakes, you are learning from someone's mistake, right? You are learning from others' mistake. That means you are not doing this mistake and learning afterwards, right? You are getting this on before, and even before you start your career. So this is a very essential video, which is a pathway. Whenever you are a bookkeeper, you need to understand. Okay. Yeah. Okay. So let's start our first most common error that the business do. So firstly is mixing personal and business expenses. Yeah, so I have seen over my career that most of the directors don't separate out their personal and business parts, right? They have the same bank account from which they do their personal expenses and business expenses. They maintain a same credit card via which they pay their personal grocery shoppings and as well as the business expenses. So this mix up everything. Okay, this mix up everything. So, if you have this principle, when you have a limited company, or if you are acting as a sole trader, right, you would be only recording expenses that are solely, right, that are wholly, exclusively, okay, wholly and exclusively for your business. Okay. Uh, so if you are including any other expenses like your personal expenses in your accounting records, then you are doing the incorrect thing. So during the audit, if something is found out, you may be in the problem. So first thing first, if you are let's say working as a even as a sole trader as of now, you might have the same bank account. Okay, as a sole trader, many have same bank account. So when you get into limited company, the main thing, the first thing that you would do is to separate out your business bank account and your personal bank account, right? If you have two, three credit cards, keep it separate. One is for my personal expenditure, and one is for my business expenditure. I would do only business expenditure with this. I'm not saying that you cannot adjust this expense via director's loan account. It can be done, but your bookkeeper might not know, like, if you have done this expense personally or your business, until and unless you provide them information. So you are not that much free that each and every day you would disclose to your accountants, yeah, this is my personal expenses that I did and this is my business expense, right? So it is essential for you to have this separated on the first end before even you incorporate your company. Or even if you are acting as a sole trader, it might be a best practice for you to have a personal bank account separate, and you have a separate bank account for your businesses. Okay. There are many potential tax complications which might arise because of it. It obscures true business profitability. Okay, you have incurred expenditure for your personal reasons from our business bank account. Now, what happens is that it reduces your overall profit, and your tax liability is calculated incorrectly. So, whenever you are in the eyes of the regulator, you are going to have been facing a great trouble. Okay, you would be having a great trouble for that. Okay, so you need to remember, you have to have the separation, right? Business and owners are separate. Keep in mind, business and owners are separate, right? This is the concept, right? Business is a separate legal entity. Okay, so keep in mind. Next is missing supporting documentation. So when you post transactions, and you do not have any receipt or invoices or supporting evidence. So during audits, whenever the auditors appear, show me this receipt, show me this invoices, you would go crazy like that. I do not have anything to show you. Okay, and you will get caught up. So this doesn't mean that you are doing these things incorrectly, you are claiming incorrect expenses, but because you are not maintaining proper records, right? This might be a potential problem in future. Okay, so let's say some are the disallowed deduction that you uh, had claimed. Okay, this will not enable auditor to identify if you uh, have the expenses really, or you are just posting it for the sake of it. You can have compliance vulnerability in it. Okay. Nowadays, with software, with cloud-based software and other desktop-based softwares like Sage, Xero, and QuickBooks, you can attach the supporting documentation. So if you are using any other software like third-party software, your personalized software for managing your account receivables and account payables, you uh, should have copy of the invoices for that, and then you attach those invoices in your bookkeeping software so that records are maintained. So nowadays it is not required for you to save each and every month's receipt and invoices in a folder and keep a drive, right? Zero would keep it for you, right? QuickBooks would keep it for you. So nowadays it is becoming easy to maintain this documentation. So documentation are essential. Normally, if we talk about in UK sense, if I claim VAT on certain things, if I purchase something for £1,000 and 200 is my VAT, if I do not have any valid invoice, okay, if I do not have any valid invoice, that claim is incorrect. If you read the terms, you should have a supporting documentation to show. Whenever HMRC investigates your record and asks you, why did you claim this £200? Do you have any supporting for that? If not, you are in trouble. Okay. So moving on to next one is incorrect VAT coding. Okay. As I said, you might apply incorrect VAT rate. So instead of 20% VAT, you are taking 5% VAT, that is the reduced rate, or you are taking zero rated or exempt VAT. Okay. This would hamper your VAT return. Uh, and if your VAT return are inaccurate, your bookkeeping again goes incorrect. And this again falls out the chances of your fines and interest that you would be incurring. And again, cash flow disruption can happen. So by VAT, I can say one example like if you did exempt a supply, let's say if you purchased an exempt product, okay, but what you did is you picked out the zero rated code in Zero. You might say that exempt has 0%, zero rated has 0%, so no worries, nothing is happening, I'm not claiming anything from HMRC, correct? But no, uh, it is separate discussion when we would be discussing about the VAT, like what are the types of VAT and why do this exempt and zero rated even exist. So you need to understand that both are different categories. If you are putting up zero rated, it would appear in your VAT return. Even if you are not claiming anything, you would be showing it as purchases, right? Whenever you uh, post a zero rated transaction, it would be showing up on you the purchase transactions in your VAT return. But when you select the exempt VAT, it is not there in any of your VAT return section. Although there is no impact on your VAT liability or any VAT reclaim, but it is an essential practice you need to follow. Okay. Next one is just second. Okay. Reconciliation failures. So reconciliation is not something that you do at the year end. Okay, it is not the sole task of the year end accountant to perform the reconciliation. Bank reconciliation is one of the most essential reconciliation that you have to do. If your banks aren't reconciled, if your banks aren't reconciled your bookkeeping, how can your bookkeeping be correct? Okay, you won't be able to find any transaction that your bookkeeping system you have entered in your bookkeeping system, but it isn't originally in your bank statement. So when at the year end I found out this discrepancy, I could not do anything. I have to change the transaction, right, to add the transaction or remove the transactions, right? So it is essential to review this bank reconciliation on monthly basis in order to identify if any transaction is not posted. So let me give you an example. If I say I am owed £6,000 by a customer, I want to receive 6,000 pound from a customer, uh, and I have not any bank feeds connected in my Zero or QuickBooks. Okay, I post the transactions by importing them. Okay, so when importing them, I forgot to add one transaction. Okay, I forgot to add one transaction, which means uh, when the customer made the payment of the £6,000, I have not actually did this entry of this AR being reducing, that is your debit bank to credit accounts receivable, right? Your AR would show up at that only, right? If you do not reconcile your bank the whole year, the bank remains as it is. You do not reconcile, you do not check and match with the bank statement. If my accounts, if my bookkeeping software says the same bank balance as per my bank statement, okay, then you are missing some transaction. Now that customer has paid something to me, but still I would say to the customer, hey, please provide me this payment. Whenever I ask that customer, he would get angry. I have paid you, what are you doing? Correct. Okay, so it is essential to have this bank reconciliation in place. Also for predicting cash flow, it is essential to have the banks reconciled. Okay, so unreconciled accounts would breed inaccuracy and financial uncertainty. Okay, and similar now, if we talk about other reconciliation, there are other reconciliations like payables and uh, receivables reconciliation. Okay, so payables reconciliation, we would ask from suppliers on regular basis to provide the statement so that we know how much payments we are due. What are the payments that remains as our liability? So is it same in our accounting records as the supplier has? So it is necessary to have those reconciled, or the supplier might have some transaction which your accounting records would not be having. So it is essential to have this reconciliation in place. Okay. If you have infrequent reconciliation cycle, you do it at the year end only, then it allows errors to multiply. It becomes more. Believe me, I have done year end, I have done bookkeeping. If during the year end I get bad bookkeeping where there wasn't any reconciliation being done, I would go crazy. I would go crazy while preparing the financial statements of that entity. You can't do that. Okay, that makes the task of year end accountants, the statutory accountants, difficult. So it is essential to reconcile your data on a regular basis, at least monthly. If not weekly, you can do this monthly. Okay, so regular reconciliation serves as your financial health check, ensuring recorded transactions match reality and identifying issues requiring immediate attention. Next is tracking and classification mistakes. You have irregular tracking habits. So, sporadic bookkeeping creates gap in financial records, making pattern analysis impossible and increasing error likelihood. So, if you have consistent, regular updates, uh, that it maintains the data integrity, and it provides you real financial insight. If you have expense misclassification, okay, every every transaction has a debit and credit. So let's say there is a one transaction where you paid money to your supplier. Okay. Let's say you paid money to your, let's say you purchased a machinery. You purchased a machinery and You recorded this machinery purchase and repair and maintenance. Blunder. In repair and maintenance, it is a P&L item. It is a P&L item. Okay, affecting directly your profit and loss. If you are making 20,000 pound profit per year, and if you purchase a machinery that is 30,000 pound and you book it under repairs and maintenance, you are in the loss just because of your bookkeeping records. Understanding my point? Okay, so it is essential to post the transactions correctly. So if you are posting it to correct asset account, that is correct. Okay, so it is essential that you are categorizing transactions, the expenses correctly, because it would vary your tax treatment. Okay, you are not calculating depreciation if your machinery is posted in repairs and maintenance, although it is sketched up at the end by year-end accountants when they do ledger scrutiny. But it is better to have this control in the first place only. Okay, ignoring receivables and payables. Most of the bookkeepers ignore receivables and payables. What they do is they don't track their receivables and payables. They just send out the invoices, and until and unless they make a payment, there is no harm to that particular ledger. We are not touching that ledger. It is important to track receivables and payables regularly because it is essential for your cash flow management, and it again damages your credit relationship. If your supplier has said that you must pay within 30 days and you are not paying it, your supplier might stop selling you goods. Okay, and if the supplier does not pay you, how would you sell something? Okay, so it is essential to regularly review your receivables and payables to have the business insight. Communications and process breakdown. Inadequate client communication. So business owners are most probably busy. Okay, they do not have time for this daily juggle, so that they have hired you, right? So that is why they have hired you. So it does not mean that they do not need to intervene in this process, because they are the owner. They know what are they doing, right? What is the purpose of that? Why are they doing that? Why are they spending anything? They know all the processes, right? As a bookkeeper, you must understand. Yeah, first thing is that you must understand the nature of client's business. If you do not understand the nature of client's business, how would you perform bookkeeping for it? Because every industry has their specific KPIs and different cash flow and different margins. So you need to understand how your client's business is, and accordingly you can provide financial insight to your client. So first thing is you need to understand how the client's businesses work. Who are its receivables? Who are its payable? Either he has multiple currency or not. Uh, how many credit cards are there? How many banks are there? Okay, so all of this. How many payroll people are there? Okay, you need to get to know each and everything. Even if you are not working in payroll, as a bookkeeper, you must understand the whole payroll process. Because if as a pay if when it comes to your bank account, when the directors pay out the employees, it comes in your bank account, and then you allocate it to court. So you must understand why you are allocating it, why you are paying it. Against that, there is a liability, right? Understand? Okay, so you must understand the whole payroll process as well. And again, it is essential to have regular client communication. You must communicate with your clients if you have any specific doubt, instead of posting it with your brain. Okay, and assuming something is like this based on your prior experience. You cannot assume anything. You must ask. You must have clear client communication and understand what they are trying to achieve. Okay. Next is missing critical deadlines. Deadlines must not be missed. If you are failing to track submission deadlines for returns, VAT returns are filed by you, and if you are not filing the returns, you are incurring interest charges, and you are having client face serious legal implication. Okay, client has transferred this work to you as a bookkeeper so that they remove their headache, and they don't want headache to come in if you are not submitting their legal obligation, you are not fulfilling the tax deadlines, it would again come upon client. Okay, and it hampers your reputation. So for that, you can have a reminder system. So if you know that this VAT quarter would be filed after this much period at this date, you must have a notification for you. You must have an email reminder or something like that to you, or add it into your calendar so that you are not missing that thing. It is essential. Okay, never fight with regulatory authorities. Okay, never ever do that. If they catch you, it is really a big headache, really a big headache. Okay, next is insufficient data protection. Your client's data is confidential, you must not reveal to anyone. You must perform regular backups. So for softwares like Sage, we have regular backups in order to ensure that if certain transactions are posted incorrectly, if you have done something incorrect, uh, you have the chance to review that and go back to previous backup and again do the right thing. Okay, so this can be done. But for Zero and QuickBooks, you are doing it on real time. Okay, but if you are doing something big with your bookkeeping software, if you are implementing a new change, it is essential. If you are removing any journal entry, you must have a snip of it, okay, before removing, so that it does not hamper if you have to reverse that transaction. Okay, cash flow monitoring failures. Cash is the king. Believe me, cash is the king. If your client if your client makes multi-million dollars per year, right? It does not mean that he has enough cash flow each and every time. He has to pay their employees, right? He has to bear the minimum regular cost, right? He has to bear those costs. So in order to bear that cost, you must have the cash flow. You can't tell the suppliers that take my profit. You are not you need to have cash with you to pay your suppliers, to do any expenditure, to pay your employees. Okay, so cash is king. You need to understand. You should monitor cash on regular basis. Your cash flow should mean that tracking accounts receivable and accounts payable, and inventory as well. So many businesses focus exclusively on profit whilst ignoring cash flow patterns. So this oversight proves dangerous, as profitable business can still uh, fail due to cash shortages. So tracking when money actually enters and leaves your account reveals timing gaps, seasonal patterns, and potential liquidity issues before they become critical. Okay, so if they become a mountain at the end, it is better to stop that mountain growing. Don't take it seriously, bhai. Wo, don't cut the forest for that. I'm getting it for example. Okay. Ha. So you should implement weekly cash flow review where you are reviewing your client's financial health, forecast upcoming obligation. If you have big purchases on the way, you are acquiring a company, so you should forecast that if with this much sales and this much cash flow, would I be able to cover up that obligation, or my client may need to take loan for that. Okay, so this is essential. Next is regular financial review. Regular financial review. What do I mean by regular financial review? Uh, Clients know at the year end, before it is filed, what are the profits. Okay, at the end when the year end accountants file the statutory account, clients review that, so they know during the whole year how much profit they have earned. But more than that, they are more interested into your monthly profit and loss on a regular day-to-day basis. What is happening after a year? After a year, I can't say I would plan after a year until and unless I receive my year-end accounts or my year-end financial statements, and I would forecast that, right? You have to keep reviewing the P&L and balance sheet on a regular basis. Okay, you should be reviewing your P&L statement monthly. If your profit in current month is £2,000, and in the next month it is £1,500, it is a significant drop. But during the year end, you have the sole figure of £10,000. You do not know was there any month when the sales picked up, and what was the reason for that. Okay, so it is essential to have this in first place before even your year ends. You should be reviewing your monthly P&L, right? Monthly statements. So waiting, as I told you, waiting until year end means missing 12 months of actionable insight. If I have data at the real time, I know what actions to take on the basis of current month, and how could I improve in the next month, right? What are the cash flow that I have? Next is balance sheet monitoring. As similarly, I told you about profit and loss analysis. Balance sheet is an important financial statement. You must review and track asset growth, liability management, and overall financial health of the business. So you can have monthly review catch up with your client to understand their data and giving them advisory on how their business is performing and how could they improve. Next is comparative analysis. You can have comparison on the basis of budgets, or you can compare on the basis of previous periods whether your business is progressing towards its goals or it requires any corrective actions to be taken. Okay, so in end, to summarize, uh, first is establish clear processes, document procedures for recording transaction. You must have clear guidelines for that. Filing documents and performing reconciliation. You should be consistent with your data. Okay. You should implement regular schedules, daily, weekly, monthly, and monthly bookkeeping routines. You should follow that. On this date, I would review the financial statement of previous month and make necessary assumptions based on that and provide cash flow insight to my client. Something like that. Invest in training. Stay current with regulatory changes. Yeah. So the regulatory authorities change the taxation and other regulation on a like whenever they want, like on a yearly basis, or whenever they are eager to bring some new reforms or laws. So you need to be updated with that in order to maintain your client's books consistency and maintain with the deadlines. So you should invest in training. Leverage technology wisely. Nowadays, if you aren't using Zero, QuickBooks, Sage, if you aren't using Zero, QuickBooks, Sage, or any other cloud-based accounting software, you are you are in the what era? In very previous civilization. In very previous civilization, you are. What are you doing, bro? It is the world of AI, but you are still keeping your records in Excel. How could you grow? Believe me, if your business is still working on Excel or any other software which is outdated, change that. Even if the cost might be a bit higher than your current process, uh, the benefit it would provide you would be really, really amazing, right? Okay. Review and refine. Regularly review your bookkeeping process, identify bottlenecks, and how could you improve on any areas. Continuous refinement builds increasingly robust system. So excellence in bookkeeping emerges from consistent application of sound principles, regular reviews, and commitment to accuracy. So your financial foundation deserves nothing less. Perfect. So here we end our session. If you have any doubts or any query regarding this whole session that we discussed today, you can comment me, or any specific topic that you would like me to make, either bookkeeping related or year end or VAT. I am planning to have VAT sessions on the way, but as times as I get some time, I would try to upload it. So yeah, will do. And as of now, for you, just one task, no, two tasks, three tasks. Subscribe and press the bell icon and like this video. Fourth one, comment. and fifth one share. Sorry, gave you 5 tasks. Just 5 tasks for today. Okay. Uh, thank you everyone, and bye. Meet you in the next video.